A very good morning to you, and thanks for joining us on Business News on CRBC TV. I am Eriti Christopher. On today's headlines, federal government of firms sign contracts for offshore blocks. Banks investor to boost liquidity with FGN saving bonds. And Nigerian Stock Exchange opens September with 363 billion naira loss. Details of this in just a moment. Please stay. It feels good to have you join us. The federal government, through the Nigerian Upstream Petroleum Regulatory Commission, has signed a production sharing contract with Total Energies and South Atlantic Petroleum and Petroleum Prospecting Licenses 2000 and 2021. The fiscal package features a $10 million signature bonus alongside production bonuses of 2 million barrels and 4 million barrels, or their cash equivalent upon achieving output levels of 35 million and 100 million barrels respectively. The NUPRC Chief Executive Officer Mbega Komolafe said the deal marks a new chapter in Nigeria's upstream oil and gas industry. This development follows the Commission's move last month to unlock an additional 810 barrels per day from Nigeria's deep water fields through its new cluster and nodal development initiative. However, this affirmed a broader vision to make Nigeria the premier destination for upstream investment in Africa. Moving on, the federal government of Nigeria, through the Debt Management Office, has opened a new offer for subscription of its saving bonds, providing banks, institutional investors, and individuals an opportunity to earn attractive returns while boosting liquidity. Report says the 2-year FGN saving bonds due September 10, 2027 carry an interest rate of 15.541% per annum, while the 3-year bond maturing on September 10, 2028 offers 16.8541% per annum, and interest payments will be made quarterly on March 10, June 10, September 10, and December 10 each year. The bonds, which are sold in units of 1,000 naira, have a minimum subscription of 5,000 naira and a maximum of 50 million naira per investor. According to the DMO, the bonds qualify as government securities for tax exemption purposes under the Company Income Tax Act and Personal Income Tax Act, making them suitable for pension funds and other institutional investors. They also qualify as liquid assets for banks in calculating liquidity ratios and are listed on the Nigerian Exchange Limited. On the next report, the Nigerian Stock Exchange has opened the new month on a negative note as the market lost 363 billion naira in value at the end of the first trading day. Investors traded a total of 407,956.05 shares in 33,843 deals, corresponding to a market turnover of 14.77 billion naira. Compared to the previous trading day on Friday, August 29, Monday's trading showed a 6% decline in volume, a 42% improvement in turnover, and a 32% increase in deals. Consequently, the current market capitalization of the NGX now stands at 88.4 trillion naira. Meanwhile, performance of the market indices reflects the downward trend. The benchmark all-share index shed 573.31 points to close at 139,000. 722.19. This represents a 1 week loss of 1.21%, a 4 week loss of 3.02%, but a year-to-date gain of 35.75%. It could be recalled that equities listed on the Nigerian Exchange Limited lost a total of 439 billion naira in market capitalization last week as sustained bearish sentiment dragged the all-share index and other performance indicators lower. And on the official foreign exchange, the naira has exchanged at the value of 1,526.02 naira to the US dollar, while depreciating marginally to 1,787.20 naira to the euro and 2,066.33 naira to the British pound. It, however, depreciated to 10.36 naira to the Japanese yen, gaining marginally to close at 1,906.19 naira to the Swiss franc and 86.72 naira to the South African rand. Business news. Thanks for being there. I am Eriti Christopher.